All right, all right. Welcome to the Blockument, crypto education through everyday conversations. My name is Nate Talbot. I'm the executive director of Detroit Blockchain Center, and I'm here with
Ashley Rose.
what?
I think we're having.
Yeah, there we go.
Hello. I'm Ashley Rose. Okay.
All right, Ashley Rose. We have a exciting, I think, episode that's going to be very helpful for a lot of people today.
Yes.
But before we get started, we do have to leave a little disclaimer in the beginning. Today's episode is presented solely for informational and entertainment purposes. It is not to be construed as a recommendation, solicitation, or an offer to buy or sell along any cryptocurrency, securities, or any related financial instruments. Nothing in this episode should be taken as investment advice because we are not investment advisors.
No.
But we do know a lot of other things.
Yeah.
So, today's episode, why we had to read that, is about DYOR.
What does it mean and where to begin? Because I'll tell you, I have a very low baseline of knowledge on that.
Okay. So we hear DYOR all the time. What does it mean to you?
To me, I take it as like back in school, like you research something, right? So to me, DYOR is you assume all of your own risks, and it's up to you to research the project and decide if you want to invest or hold on to those coins or tokens. Mm-hmm. But the thing is everyone always says that, but nobody really dives in and tells you, how a beginner can do it.
Right. So when you're looking at something new, a new project you're interested in, what's the first thing you do?
Phone a friend.
Phone a friend.
or I'll Google it, but I know that the things I'm doing are not really, good. But I have heard of CoinMarketCap.
Mm-hmm.
Recently, I've tried to figure out what is its utility, although I still need help with that.
Okay.
Maybe like read a white paper, but I don't do that.
All right.
Selling myself out here.
No, I mean, that's, I think, what most people do. It's really easy for people to give out their opinions and say that they're doing their own research. This is sort of one of the downfalls, I think, of the age of information that we're in, right? So much information is at our fingertips. How do you know what's real information? How do you know what's fake information, good information, bad information?
Yeah.
This was, throughout history, we've had these centralization hubs, institutions, right? Libraries, things like that. We had to trust these third parties to sort of go through all of this information and tell us, all right, this is good information, this is bad, and hopefully we could trust them.
Yeah.
We've seen over time, whether you trust most institutions or centralized sources of information, has become a lot more harder to determine whether or not you should trust them. But there is no way to have decentralized information that's trustless that I know of, right? So you have to sort of pick up on your own filtering skills and just learn how to parse through what's good and what's bad. And we'll maybe discuss some of those strategies today. I think there's two basic approaches when you're coming into looking at something you want to invest your money into, right? Mm-hmm. The two broad categories are like technical analysis, and then you have fundamental analysis, right? Technical analysis is really only helpful for traders. And this is when you're starting to look at the charts, look at price movements, look at historic past prices. But if you don't really know what you're looking at, I don't know how helpful that really is. And if you're not trading, right, you have to also be looking at why you're getting into any asset. Yeah. And I think this is a big mistake. It's the first mistake I think a lot of people make. especially if you're involved in crypto and especially if you're on like crypto Twitter. Because crypto Twitter is full of a lot of trading influencers.
Yeah.
Right? And so they're sort of like the superstars of the crypto space. Nobody really follows the developers.
Yeah.
Right? They're all following the crypto traders because they all want prices to moon and they want to make 500x in like 3 hours.
Yeah.
But that's a really perilous game, and almost everybody loses at that game.
Yeah.
So I would advise against getting into technical. I would advise against trading for most people. And I'm talking about professional traders too. I advise against them even doing it. But you also have fundamental research, which is where I think we'll focus most of today on.
Yeah.
And the difference is with fundamental research, it's not about the short-term price movement. You're not looking to flip your money really, really quick. What you're looking for is projects you can invest in that are have some kind of base value. There's a real team behind it, or if it's a decentralized project, the people who are working on it, the governance models, whatever, are sound. The game theories make sense, at least to your knowledge of whatever you know about game theory.
Yeah.
Like you're really just asking like, why does this thing make sense? You're not looking minus price action. Oh, it went up, like people all aped into Dogecoin, right?
Yeah.
Because they're like, oh, it went up 20,000% in like 6 months, and it's only a penny now. If I buy it now, and it goes to $1,
Yeah.
but you're just looking at price.
Right.
And with any kind of thing, in my opinion, if you're not one of the type of people who are already ahead of the curve in a specific area,
Yeah.
by the time you hear about it, it's probably too late.
Yeah.
Right?
Yeah.
All the good money is gone by that point.
Yeah.
So fundamental analysis, there's a couple ways to do it. You mentioned white papers.
Yeah.
What's a white paper?
Oh, that's a wonderful question. As far as I know, it's basically like almost like I would compare it to maybe like a business plan. Like it's the blueprint of like what it does, how it does it, and the like roadmap for the future.
It can be. So historically, right, white papers are technical papers about something. Usually they're used in science, something in science, or something in technology, usually a computer science, so you're still falling in that science realm, where you sort of describe, you have, we'll take the white paper, the Bitcoin white paper as an example, right? That's a technical white paper, right? It has an abstract which outlines this is what we thought, this is our quick conclusion, all in about a paragraph, right? We need to have peer-to-peer money because centralized systems aren't it. And then every chapter you have an introduction, like how they got to that point. You have all these other chapters on sort of a technical breakdown, like, all right, well, why do we need to be peer-to-peer? Why do you need to use cryptography? Why do we need to be distributed? Why do you need to be X, Y, Z, right? Then it comes down to a conclusion. And so the entire Bitcoin white paper, which, revolutionized, everything.
Yeah.
8 pages, because it's not a lot of fluff. It's a technical white paper. Of course, that can be longer if you have more technical specs.
So 8 pages is short?
8 pages is reasonable.
Okay.
I've parsed through multiple white papers and different things, helping people do dissertations, other things before. I've seen white papers that are, 15, 20 pages long. I've seen them that are like 2-3 pages long.
Yeah.
It really depends on the problem and the problem you're trying to solve and how much explanation. So there might be a roadmap. You mentioned roadmaps in there. So if it's the white paper on, if it's a business who's getting ready to do something, they might use a technical white paper. But that's not really meant for the masses. Okay. That's meant for people who have some kind of ground understanding of the field that the product's in, right? So they're traditionally a really good place to start if you want to understand the fundamentals of why something works. Well, this is the technical breakdown. Okay. Like the Bitcoin white paper, it's pretty easy to read. But once you get around section 5 or 6, you start to get into cryptography math. And so if that makes you uncomfortable,
Yeah.
right, then it might lose you. But that's the level that white papers are usually at.
Yeah.
If you're reading a white paper, so when I'm doing fundamental research on something, honestly, I don't even look at white papers. Not anymore, because most white papers are not that now, especially in crypto. Most white papers are just marketing fluff.
Oh, wow, really?
So it's just a marketing brochure that they
Yeah.
call a white paper.
Yeah.
And they'll still have like an abstract, like, well, here's the problem and here's how we attempt to solve it.
Yeah.
Then they might get into some quasi-technical stuff. But when you read through, the majority of the ones I've read through, they don't even understand the technical jargon they're talking about. Because it makes sense on a surface level, but it doesn't make sense if you really have a low-level understanding of the topic.
Okay.
And then the rest of it sort of like really, it gets into tokenomics. And that's really where a lot of them lose me. Because if you're, do you understand what tokenomics are?
I was just going to say, so tokenomics are like the economics of the token, or?
Yeah, it's like what makes this thing have value,
Okay.
right? And the tokenomics should be pretty simple to explain, or at least understand, right? Bitcoin's tokenomics. There's no tokenomics section in Bitcoin, right? Because the white paper itself sort of explains just why it would make sense.
Okay.
Which is if you have a limited supply of money and you have a strong network, right? As more and more demand comes for usage of this money, the price has to go up because supply and demand.
Right.
The supply gets more limited, the demand goes up, the price goes up, which is why it's divisible out to 100 million Satoshis per Bitcoin.
Yeah.
It's simple math, right?
Yeah.
The point of Bitcoin isn't the price going up. The price going up is a side effect of the point of Bitcoin,
Okay.
right? That's also true with Ethereum. Ethereum becomes a little bit more complex. It doesn't have the limited supply that Bitcoin has. However, the economics of Ethereum is we want to be a world computing system, right? I want you to be able to put something on, build a dApp. But how do I keep some bad actor from building a dApp that just sucks up all the computing power of the entire network? Well, so we charge a gas fee. That's why you have fees. And so they have the fee, and if you can only pay the fee in Ethereum, the base token,
Yeah.
right? So now there's a cost to run it, and now there's a demand on Ethereum because the more people run dApps and applications on top of Ethereum, the more they need ETH to pay the gas fees, right?
Yeah.
So some basics. You don't need to like this huge 10-page marketing to explain the tokenomics of either of those.
Yeah.
That makes sense, right?
Yeah.
So when I read a white paper and I start getting into this tokenomics section, that's really just a bunch of marketing fluff about number go up and you're going to get rich.
Because it should just be kind of self-explanatory. Is that
It should sort of make sense.
like you shouldn't necessarily need a tokenomics section because the core of the project should just be make sense.
Yeah, the utility of the token, how you can use it, should drive the price factor.
Yeah.
And so that leads you into sort of the next part of that, looking at white papers or understanding any of this so you know where to look.
Yeah.
Is why are you looking? So the first question I ask anything that's not a core protocol. So there's Bitcoin's a core protocol token, right? ETH is a core protocol token, AVAX on Avalanche, Cosmos, all of the Atom on Cosmos. These are our core protocol tokens. They should have that same basic use case as either Bitcoin or Ethereum, right? Which they power the network, they secure the network, whatever.
Okay.
They incentivize the security of the network, something like that. But once you start looking at applications on top of it, which is what most people go in to buy, right?
Yeah.
dApps built on top of Ethereum or some other protocol. First question I ask is, why does this need a token? You don't pay the gas in the token.
Yeah.
So why do you need a token?
Yeah.
And that's what I'm looking in the white paper to see.
Okay.
Can you explain that thoroughly?
Okay. And so the base protocol, let's say like ETH or Sol, what would an example of a dApp be underneath, just so people kind of know what?
Okay, so you have Ethereum, the base layer, and then let's say you have You have Aave.
Okay.
Say Aave is a lending protocol on top of Ethereum. Now it's on several chains.
And what's its letters?
Aave, AAVE.
Okay, that's what I thought. I just wanted to make sure because.
Yep. I'm not telling you to buy it.
Yeah, no. Yeah.
I'm telling you,
but it's like,
that's one DApp on top of it.
Yeah, because I'm learning something right now that like DApp seems to be like synonymous with like some of these other what you might call a ticker if it were a stock, like the letters. So
yep. So like Bitcoin is BTC.
Right.
Ethereum is ETH.
Yeah.
Aave would be AAVE.
Right.
Yeah.
But it's interesting. I didn't know that some of those were called dApps. I know that's probably silly to like someone who's
well dApps are just decentralized applications.
Yeah.
Right. So you either have a protocol like Ethereum, or you have, if you're building something on top of Ethereum, it's most likely a dApp.
Yeah.
It's just a decentralized application, and that can be something in DeFi, that could be gaming, that could be a whole bunch of stuff.
And that's also the difference of where it's like coin and token, right? So like.
Yeah. A coin would be your base layer.
Yeah.
Like Ethereum would be the coin.
Yeah.
And then you'd use these ERC20 tokens on top of it. Or an NFT is a non-fungible token.
And then would that AAVE
would be a token.
A token. Okay.
Yep.
Yeah. Okay.
Yep. If it's not the base layer coin, then it's a token. But nobody thinks that deep, so everybody just uses them interchangeably.
Great. Well, that's why I'm saying, because it's like, as we're going through, I'm like, oh yeah, well, I feel like I've interchanged that many times.
Yep. So I don't become a stickler, because who wants to be the grammar Nazi at the crypto party?
Yeah, but I think it's fun to know.
Well, actually, right?
Yeah.
So Aave would be a dApp on top of something. Aave has its own coin. So now the question is, well, why do you need your own coin?
Right.
Right. And this is something the white paper should explain. And what you'll find is I'm going to say about 99, probably closer to 99.99% of projects, really the coin is just used as a fundraiser mechanism. Mm-hmm. So the developers of the project can come up with something and raise a bunch of money really, really quick without having to go through any kind of regulated entity or whatnot. Right. This leads to some of the problems, as of the time we're recording this episode, I'm sure it'll go down as one of the biggest events in at least the crypto space with the FTX, blow up and whatnot. But while that was a very centralized problem, it had nothing really to do with actual crypto.
Yeah.
It had to do with just centralized things. One of the things this centralized party used to exploit people was they created a token.
Yeah.
And if you looked into the tokenomics of their token, it made little sense, right? And if you even look in, it's an exchange token. All right, well, what do I get with this, right? Binance, which I don't know when people will listen to this, but at least at the time of recording, Binance is like the world's largest crypto exchange.
Yeah.
They sort of invented the concept of exchange tokens with their Binance token. And the point was, if you hold this token, you get a discount fee on your trading fees. So you can get really, really cheap trading fees for holding the token. Therefore, that was the utility.
Yeah.
Now, there's centralization problems and all that with this.
Yeah.
But at least the token had utility.
Yeah.
Versus saying, well, we have this token and we have this exchange, right? And you say, all right, well, if you're FTX US, which is regulated, what does this token get me?
Yeah.
Well, it gets you rights in how the exchange runs. Well, does it? Because that makes it a stock, and that makes it a security, and that means it needs to be regulated and can't just anybody buy it, and you have to do these public offerings, blah, 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 blah.
Yeah.
So do I get a say in how things run? It's like, no. You don't get anything. You don't get any power. But if you hold the token, maybe moon.
Yeah.
So this is the thing that, people who were always critical of FTX and the FTT token, this is one of the things they pointed out long, long ago.
Yeah.
But again, if you're not really doing your own, if you don't even know why you're doing your own research, and the white paper might look fantastic, and really, what's coming out now with all that stuff is these large-scale investors were investing because other large-scale investors invested, and that was the only research they did.
Yeah,
So white papers can be useful. I would recommend people go look up some traditional white papers in the scientific realm. I'm not telling you just because just because a white paper is out doesn't mean it's true.
Yeah.
But you'll start to understand what a technical white paper looks like.
Yeah.
And then when you look at a lot of these projects, you'll see it's just marketing fluff.
Yeah.
Right? So the first thing I would do in doing your own research is be able to differentiate what's a white paper and what's a marketing packet.
Yeah, I was just going to ask, what's the first thing?
Yep. So that would be my thing with white papers. Another place, I don't think most people even look at white papers anymore. I think it's just something people say so they don't sound dumb when they make an investment. Like, why'd you buy it? Well, I looked at the white paper.
Yeah. Oh, you literally looked at it, though. Did you read it?
Right. The other place is social media. I think that's the most popular place people do their own research, which is the absolute worst place you can be doing your own research. However, there is something you can do. You have to be wary. First of all, if I can throw out 1 million predictions a day. Mm-hmm. 1 or 2 are going to stick, right? So you can't look at what somebody currently says and is promoting like, well, I said this and I was right.
Yeah.
You want to look for what they said that was wrong, right? And this is a power that social media can give you.
Okay.
Whether we're talking about Twitter, YouTube, this is how even when I was looking, early on as crypto YouTube was starting to take off in late 2016, 2017. I'm like, well, why should I believe this schmuck?
Yeah.
And so I waited. I didn't believe any of them for a while.
Yeah.
But what I was able to do is go back in history. So they'll talk about see this project. I'm like, oh, this tanked, or this is doing really good.
Yeah.
Here's a YouTuber who talked about it. Let me go back 6 months or a year. Now you can go back years.
Yeah.
What did they say about this project then? Where's this project now? Is this something they predicted? How accurate are they?
Yeah.
Before you start believing anything they say today, see what they said yesterday. And if you can't find any bad predictions they made yesterday, months ago, that means they deleted it and only left the good predictions up.
Yeah.
When you can find people, nobody's going to be right about anything. You don't know how any of these projects, everybody's gambling. Again, when you go to the technical analysis side, it sounds technical, like, well, when you do this, it must be right. And all these people use technical analysis to tell you why these projects are so great.
Yeah.
But technical analysis at its core, the one thing we can talk about it today, is it's just a prediction model, and a not very good one. It uses just a bunch of funny math. And it says, in the past, this did this, and other things like this did this in the past. So maybe it'll do that in the future. Yeah. That's the best you'll get with technical analysis. Ooh. So that's a guess.
Yeah.
So people are going to be wrong, and that's okay. Mm-hmm. What you want to do is see why they were wrong, whether they were just shilling, right?
Yeah.
One of the things we talked about with this podcast, right? We don't want anybody to come on this podcast to talk about how a DeFi protocol should be, but they're shilling their own DeFi protocol.
Right.
Because it's just a covered up ad, right? And that's what a lot of them do. A lot of the Twitter, almost all of the Twitter people, right? They get paid to do it, Don't trust, verify.
Yeah, their incentives don't align.
Incentives don't align. But this is where most people go, is your social media. So if you're going to use social media because you don't understand how to read white papers, you don't understand how to figure out a tokenomic, or even if tokenomics is a good metric for anything, if you don't know these things, I mean, it's like you said, like, I got to ask a friend. But all of my friends ain't into crypto.
Yeah.
So now I got to talk to my Anon friends on Twitter or something, or Reddit. So when you're doing that, take heed of who you're listening to. People talk really good.
Yeah.
They talk really good game. They can come convincing all the time. Go back in history and see what you can find where they were wrong. Yeah. If you can't find it, they were probably wrong a lot. Don't trust them.
Yeah.
And if they do have wrong predictions, take a critical look. No matter how bad you want to buy that XRP or whatever it is you're looking at, take a critical look. What do they say? What do they get right? What do they get wrong? Why did they get it right or wrong? I mean, did they have, while they were right, was it because somebody from that project was there and they were shilling them? Because that means they were probably getting paid to pump it.
Yeah.
Right?
Yeah.
So be critical of social media. But social media is this place you can look. The other places you can go is if you do have a slight technical understanding in the crypto realm, block explorers are sort of good, especially if you can read smart contracts. and you don't have to be a full dev to be able to read a smart contract or any computer code. Like, if you're really interested, I mean, if you're talking about $50 you're investing, you know, while that might be a lot for a lot of people, that's maybe not be worth the time to go spend a day or two researching. But if you're investing thousands of dollars, it should be worth your time to take a weekend to do some very, very base research. And what I would recommend is doing some very, very base research in just basic computer coding. I don't care what language, JavaScript, Python.
Interesting.
I would recommend going for a very user-friendly language and just learning the basics. What is a script, right? What's a variable? What's a loop? What does an if-then statement mean? Because that's all smart contracts is basic. You know, Solidity, which is the Ethereum language used to write all of Ethereum smart contracts, is just a variation on JavaScript, right? And it's not very hard to learn that. You might not be a programmer, but anybody that can just read in a weekend can take this little, it may take 6 to 12 hours, right? 6 to 12 hour, very intro course in computer programming. And then you can parse your way through a smart contract because you'll understand basics.
Google basic computer coding and
go to like Udemy, go to YouTube.
Okay.
You know what I mean? It's just programming. There's not financial incentives with teaching somebody how to program something.
Yeah.
So you're not going to find you might find a lot of bad code, but you're not going to find a lot of bad information on just like, what does a variable mean?
Okay.
What is a loop? What's an array? Right? These are...
I mean, I hear the word you're saying. I got to do this myself. So.
Right. And people hear them all the time, but you don't have to know the fundamentals. You don't know how to design an application that's going to take up the least amount of memory and, you know, not parse blah, 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 blah.
Yeah, just like pick out the main things.
Get through a basic, short 101 introduction to... Because I'm telling you, you'll be able to then go to like a block explorer.
Yeah.
Which is the blockchain, right? A block explorer is just a user interface to look at a raw blockchain data, and it parses the data for you.
Yeah, because I was going to ask you, what is a block? Like, where do you go to look at a block explorer?
So every chain has one or multiple ones. There are some popular ones. So you can go to, for like Ethereum, we might go to like Etherscan.
Like .com?
Mm-hmm.
Okay.
Actually, a best way to find them, really, in my opinion, is use one of the coin analysis tools like CoinMarketCap or CoinGecko. I prefer CoinGecko myself.
Okay.
Because they're showing you the price, right? That's what most people use it for. Oh, here's the market cap and here's the price. But when you click on a coin, it gives you some more details. One of which is, here's this coin's smart contract on a block explorer.
So then you would just click
So
that.
you just click that, and it's going to bring you right to the block explorer for that token. So you know you're looking at the real token and not some copy, not somebody because anybody can write a smart contract and call it whatever.
Yeah.
So we talked about Aave earlier. There could be 50 different Aaves on the Ethereum blockchain. Only one is from the set of developers that we think about. The rest are scams.
Sort of like a Twitter without, like with the check. You want to find the one with the check.
Yeah, you want to find the one with the verified check mark.
Yeah.
So using something like CoinMarketCap or CoinGecko or something like that, that should be bringing you to the correct contract if you're looking at the correct coin.
Okay.
You know what I mean? So you click that, you can look at the smart contract, and you can look at just some basic stuff.
Okay.
You know what I mean? And you'll be able to, the more you get used to reading it, the more you'll be able to see some basic things like, all right, does this have, are there keys baked in someplace, other keys? So now we know the development team has backdoor access to it. And then once you see that, because a lot of these projects, the ones people use a lot and trust a lot, do have backdoors to them. And the next, well, it's not a yikes. Again, this is why doing your own research is like, why do you need a token?
Yeah.
Like, you have to ask those questions. Well, why do you need keys? Well, if you're a project like Aave, right, and just starting off, and the whole purpose of Aave is for a bunch of people who want to lend money so they can earn interest on it. So they're going to have to put all this money into a smart contract.
Right.
right? That makes it a honeypot for people to want to hack into.
Yeah.
Again, Bitcoin had this really special moment in history where it could go through this whole development phase and nobody cared, right?
Oh, because
nobody cared about cryptocurrency wasn't a thing.
Yeah.
And every other digital dollar that ever existed before that failed. So nobody cared.
Yeah.
Bitcoin had years of like trying to go through different exploitive methods to break it, to fix it.
Yeah.
You can't do that now. So when Aave launches, every hacker in the world is looking for a weakness instantly. And you might have one because it's just humans writing computer code.
Yeah.
And they can make mistakes. 2022, I believe, was the year of the most hacks in the cryptocurrency space ever, for dollar value.
Yeah.
Right? Wow. Billions of dollars were siphoned out through exploits in the code.
Not good.
So how do you prevent that? You want to build something decentralized, but maybe you have to build up to decentralization, right? And so a team like Aave, and I'm not speaking factually here on Aave, I'm just sort of taking some presumptive, right? A team that's developing Aave might say, well, maybe we want a multi-sig, some kind of multiple person security layer. So if somebody does exploit it, if we found a weakness in our code, we can lock that out real quick. Maybe we don't trust one person to do it, but maybe we trust 4 or 5 or 7. And then again, we're talking about doing your own research. You have to ask yourself as an investor in this, is that a good idea? Is that a crap idea?
But would that be something that's in the white paper?
Should be.
Or like where would that information
That should be in the white paper. And if there's a website, which we'll get into, I have
sorry, I'm jumping
dubious things for websites and things. But yeah, that's something you could find in the white paper.
Okay.
But if it's open and they're transparent about it, you should also be able to see it in the smart contract.
Open source, is that what you mean? Okay.
Yeah, because if it's closed source, that means part of the code is secret.
Yeah.
But that's another thing you might be looking for. Is a part of the code closed source? And why? And do I care?
Yeah.
Right? Maybe you want everything to be open so everything's cool. All right, fine. You probably don't want a closed source. But you might be thinking, all right, well, this is the part of the code that's going to be the most easily exploitive. And until we have a better decentralization model, we don't want to make this part open.
Yeah.
We want to open it up. But now you have to trust the team that one day they are going to open it up.
Yeah.
Right? So again, we're not to... purposes isn't to tell you what to trust, not to trust, but these are some of the things you want to look at when exploring these different
some like food for thought.
Right.
Yeah.
So you have smart contracts you can look at. We were talking about online analytic tools. The most upfront one is a website, right?
Okay.
So if a project has a website, that tells me several things. Well, the first question makes me want to ask several questions.
Yeah.
All right, especially we're in the cryptocurrency space, the world of decentralization. If it's decentralized, who's paying for a website?
Yeah.
And so if I'm looking for a decentralized project with no lead and no single point of failure, a website is a red flag to me.
Oh, wow. Yeah.
All right, well, maybe there's a lot of projects set up foundations.
Yeah, or like maybe like a escrow account where like, I don't know if that's the right terminology or not, but like an account where like funds.
Yeah, but who set up the escrow account? Who controls that?
Yeah, good point.
Right? So like, again, Bitcoin has bitcoin.org. That's a website. That has nothing to do with Bitcoin though. There's a single person who controls bitcoin.org that used to be Satoshi Nakamoto. And then they passed the keys off, and then the keys have been passed for that website off. But those are all just, here's some info, but it's not the single source of truth for Bitcoin. And it says it right on the on the site. People should know that. Now, it's out of all the trusted resources, it's one of the most trusted resources in the Bitcoin community. You go to bitcoin.org, but everybody needs to be well aware that is not Bitcoin.
Oh, wow.
Right? Because there's also bitcoin.com.
Yeah.
But that's not Bitcoin either. That's Bitcoin Cash, which does have clear leaders. And it does represent the incentives of Bitcoin Cash. When they disagree, they break off. And you have all these other fraction things. So a website could be a red flag for you. But maybe they've explained the purpose of the website or the foundation, but then you want to look into the foundation that's starting it, right? And how much pull do they have over the project?
Yeah.
You have some projects that are arguably technically decentralized with foundations. Something like Cardano comes to mind, right?
Okay.
The network, the platform is decentralized. IOHK is the foundation or whatever that sort of oversees the development stuff. But everything they do doesn't necessarily have to make it into the code.
Okay.
However, everything they do tends to make it into the code. So, but not on a technical, on a very technical definition level, though, they're separate, right? Versus other ones, you know, if you look at who's contributing to the code. So we talk about websites. Another website you can look at is GitHub.
Okay.
This is a development repo site. So all the developers, if it's open source, it's sitting on GitHub. Anybody can look. Anybody can add comments to it, right? Okay. And then that gets merged in and whatnot. And so you can look at a project and say, well, how many different developers are contributing to this code base of this decentralized project, whether it's a protocol or a DApp or whatever. And you can say, all right, well, there's like 6 developers who contribute code.
Yeah.
So one source I saw just this morning, it had like Ethereum with like 245 people who have contributed code, right? So it's like, all right, cool. And then you have other projects that might have like 15 people who contributed code. Which one would in your opinion, would be like the more decentralized one?
I would say the one with more people.
Right. Probably. But then you got to start looking into who those people are.
Yeah.
And this is why people don't do your own research, because you see how many questions you have to start asking.
It kind of reminds me a little of like Wikipedia. Like anybody can add to that, but also like that also makes it bad. Because
but it also makes it good. But, but if you see,
it's good and bad.
If you know the source of how anybody can add, I think Wikipedia is a good source to kick off a lot of research. It's not the end-all, be-all of truth, but I can put something in any Wikipedia article I want to. The power of Wikipedia is anybody else can come and be like, that's bullshit.
Yeah.
And the argument has to happen right there in public before it gets in. If it as soon as it's contested on the page when you're reading, it's like, some of this information might not be legit. And you can click the link and it's going to show you the argument.
And is it different? Is that not how it goes for like writing code? Like
if it's open source, that's how it's supposed to go. Yeah. But where you do general information on Wikipedia, most code stuff happens on like GitHub or some kind of Git repo, right? So that's a good place to look. If you're just bouncing around looking at places, the website is probably not the best information, because if you have a website, unless the project you're looking to invest in or support or do whatever with, unless they're very open about all that, because that, again, it doesn't mean it's bad. It's just, what are they telling you in the white paper? What are they telling you in the marketing? And then what are they doing?
Right.
And you have to line all those things up. And if the project's like, look, we have an intent to be decentralized, but we can't do it now because we don't know how to do it and be secure. Yeah. And your security is more important to us right now as we build the community up. Yeah. And so, like, we're going to be centralized. We're going to have a website, but we're going to turn this over, and here's our roadmap of turning things up. And if you're comfortable with that, at least they're open and honest about it. Right. But when they're talking about, no, we're the world's most decentralized, blah, 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 and it's like they control the treasury. Yeah. This is, again, at the time of recording right now, one of the big things happening in crypto besides FTX is the Tornado Cash situation. And Tornado Cash is just a Ethereum mixer. It allows you to put your Ethereum in, and it mixes it up and sends it out to a different wallet. So it makes it much harder for people to track because it's an open public blockchain. Okay. So everybody can see what you have. So that allowed people to mix it up. Turns out criminals might want to use that too. I mean, it happens. Yeah. So I won't get into the full Tornado Cash story, but in short, one of the developers is now sitting in prison in, I believe it's Sweden, because they're saying he helped facilitate illegal transactions involving like North Korea or whatever. And the argument, of course, the defense is making is these are decentralized platforms. And the prosecution brought up a really, really good point. And they're like, yeah, you say that. You say there's a DAO, a decentralized organization that makes they vote, but you hold a majority of the tokens, which means any vote that happens is irrelevant because you and the other few developers could decide something and outvote. Even if there's 20 million other people that hold tokens, you hold them enough to sway the vote. So you've just eliminated all of your decentralization arguments. And while I don't necessarily agree with the overall prosecution take, that's a very good stick point right there. You know, it was a good enough stick point to leave him in jail until February when the trial begins. You know? So,
I mean, you can't argue that.
Right. But yeah, so you want to look at these centralization factors, decentralization factors, and determine in your own judgment if they're aligned. Another online analytics tool, there's a few of them. So all of these I'm naming are just ones I know and use, but just because I use them doesn't mean I'm smart enough to tell you good things to use.
Do your own research on doing your own research.
Exactly. But at least you'll know the classification, right? And so there's some that dive in deeper. One I use is called Masari. I think I don't know the website, so just be careful in looking for it. Don't just randomly invest things so you find the right things. We do link resources on theblocument.com. So if you are interested in any of the things I'm talking about, the direct links to the official websites of a lot of these will be listed there after the episode. So go to theblocument.com and you'll see resources for every episode.
Beautiful.
But like Masari is like they're like an analytics company. They basically just look at all types of blockchain projects, NFT projects, DeFi projects, whatever. They do their own summaries, again, whether or not you trust their summaries or not, but they tell you the basic rundown. They basically give you these white paper summaries.
Or like a Cliff Notes.
Yeah, like a Cliff Notes of it. And sometimes it'd be like the white paper was like marketing, and then there was no white papering in the white paper. So they'll tell you a few things, and you can get price analytics stuff and project analysts and who's involved and information about the foundations and the distribution of tokens. So it's a really good starting point, in my opinion, to start digging in deeper without you having to jump all over the place. If you're into like DeFi, you have like DeFi Llama. That sort of tells you about like different protocols, where they can be found, how much is actually locked up in the protocol. We call that total value locked. How many people put it in? People use that as a measurement of trust. Similar to, I know a lot of people, if you've been in the space for a little bit, you know about market cap. And so we judge a project's success by its market cap, even though it's a stupid metric because it's made up. But that's what we judge. They do the same thing in DeFi type projects. They use total value locked because it's a signal. If there's, $1.2 billion locked in the protocol, that means people put $2.2 billion of trust into this protocol. But, I mean, just as a counter of that, people put billions of dollars trust into FTX for the same reasons.
That's where you're going.
Whether or not you want to use that as a sound basis, but it'll give you those metrics if you're interested in it, along with some other ones. And then another one that goes back in time a while is really the first, one of the first places I started looking outside of like a CoinGecko or CoinMarketCap is a site called like DApp Radar. Which same thing, it tells you about like daily active users, monthly active users, how much money is flowing through it. But with all of these tools, especially when you're talking about like how many transactions are getting processed or how much money is flowing through it, again, you sort of hit it earlier, do your own research on doing your own research. I've heard a lot of projects advertise, we're the best blockchain project because we handle so many transactions per second, but those transactions per second are like these insignificant little side transactions that are all internally happen and has no reflection of how good that DApp is, how many people are using it, how useful it is, how responsive it is. Sometimes very low transactions, but very high quality, matters. So you have to really balance. Again, do your own research. Always ask why until you can't run.
Yeah. That's kind of the theme I'm noticing here is just ask why.
Yeah, I'll do it personally until I'm out of whys. The 7 whys is like, I can't remember who came up with it, but the 7 whys, right? And this applies for anything besides investment. Like, ask a question, ask why 7 times.
Yeah.
If somebody can get you that far down, they probably understand what they're talking about. And if you're following along, you probably have a much deeper understanding.
Yeah.
Usually around 3 whys, it breaks down.
Oh wow! I didn't realize you could use it for other things other than like discovering yourself. That's how I know it. I know it from like self-developmental stuff.
Yep. Yeah. I mean, you just go to a project. Why does this project need a token?
Yeah. Just take the 2-year-old.
Get that answer, and whatever answer they tell you. Yeah. Why? We need it for security.
Yeah.
Why?
Yeah.
I thought Ethereum was your security.
Yeah.
And they can answer that. It's like, well, why?
Yeah.
Why? They might get frustrated, but screw them.
Yeah.
Who cares? It's your money.
Yeah.
Right?
Yeah, you're very
This
right.
is the whole point of doing your own research.
Yep.
This is your money. So if you're talking about like $10, $50, if you're talking about an inconsequential amount of money for your personal well-being, maybe not worth the time.
Yeah.
But if you're talking about anything where you're going to be at the least bit irritated, I had 0 cares that FTX fell.
Yeah.
Because I had 0 interest.
Yes.
I had 0 assets there or in any of the corresponding companies that have fallen since.
Yeah.
So I don't really care. Luna fell. I had a little bit of money there.
Yeah.
I lost that little bit of money there.
Yeah.
I cared a very little bit, though, because I didn't trust it with my entire life savings, right? The more you're going to care how much you lose, I sleep like a baby. Most of my crypto portfolio lays in Bitcoin. I sleep like a baby. I just believe in the fundamentals. I'm not worried about Bitcoin network taking it, whatever. So how much research you need to do should be probably equivalent to how much you're going to care when it all goes to zero, if it all goes to zero.
Yeah.
If you don't care, don't research. YOLO.
That's right. Just ape in.
Yep. So those are my key pieces on fundamental, analysis. I don't know if you have more questions, more inquiries.
I don't know that I have any questions, like specific questions, but so to go back to kind of like summarize a little bit. So a first starting point. Okay, so I feel like first of all, you should ask yourself why you're looking into a project. And then it almost seems like basically what you're trying to do through all of this research is to see if all of the incentives are aligned. It seems like that just seems to be like a common theme with all of this is like you want to do things the way your incentives are aligned.
Yeah. I mean, again, you're right. And the core incentive for any individual should be, why am I even looking at this thing?
Right.
Because maybe it's not financial pieces. For most people it is. But maybe it's not financial. Why do you even care about this project? Because like DAOs are becoming a big thing, which is, decentralized organizations.
Right.
And these are about how do you do communities without having this central body governance that organizes everything. And if the community is most important to you, you're not looking at the incentive numbers. The questions you should ask, though, is if you're a DAO, if all of their thing is buy this token has votes, buy this token because the token value will go up.
Yeah.
Well, if our whole point is this community value, why do you care that the token value goes up?
Right.
This is a big thing with NFTs. If you're into art, if you're in it for the art of a art NFT, then why do you care what the floor price is, how much you're going to go up? When you go to an art show and buy somebody's art, it's probably not because you want to flip it. Unless you're doing like high-end art, But if that's your case, you know, there's a disconnect. You have to bridge those gaps and all that. So yeah, it's all about aligned incentives. They don't have to be economic.
Right, and I think that's kind of, from what I'm getting, I think that's important because so once you have your why, once you have like your personal incentive that you want to align with whatever token or coin it is you're looking into, then you would go to like the white paper, social media, and then the online the analytic tools like the CoinGeckos and the Masaris, possibly the GitHub. And then while you're going through all of those, you want to kind of take note and check off if what they're saying kind of like resonates with you and is aligning with your incentives and kind of aligning with your why.
Yep. That's exactly it.
Oh, look,
I personally take the lowest hanging fruit and work my way up. I'll start with those that I've filtered through the years now that I trust through social media or personal social networks, people I trust. I use those as an early indicator of projects I haven't heard of, that haven't come on my radar yet. Then I take that and I'll probably go to like online analytics because that's the easiest next step.
Yeah.
Let me see what Masari says about this.
Yeah.
Let me see what this other place says. What does DAP Radar say?
Yeah.
If that all aligns, things start looking good, I'll start diving into more time-consumptive research. But I'm not going to start off diving into GitHub or the Block Explorer first because that takes way more time than just asking somebody.
Yeah, I was kind of thinking, like, when you were explaining the online analytical tools, I was like, oh, it kind of seems like that's like a lazy man's do your own research, kind of like it's all right there for you.
But it's okay to be lazy at first.
Oh, I know.
7 whys, right? Maybe each phase ask 2 whys. So if you tell me about a project, I'll be like, why? You're telling me. I'll be like, well, why?
Yeah.
If you got me
done
convinced
that to
there,
me before.
Yep. Then I'll go someplace else.
And I'm like,
I
don't know why.
Whys.
So that's a good question. Yeah.
Yep.
Yeah.
So that's do your own research.
Yeah.
Make sure you do your own research. You can start again at theblocument.com.
Yeah.
Every episode we do, we have resources to what we talked about. So several of the projects and resources we talked about here, we'll have links up to in the next at theblocument.com. You can also ask us questions about it.
Yes.
Right? Reach out to us. We're on Twitter, TikTok, Facebook, at The Blocument. So come give us a follow, join. We stream. We're on YouTube, Apple Store, Spotify, and we just launched on Fountain app, where you can listen for free or you can donate some Satoshis. We'll be setting up in the new year maybe a Satoshi rewards program for people. So come check us out there.
Yeah, and also you can stream us on I think Roku TVs with Streamcast.
And we've just launched on Roku, so you can go to Roku TV, go to Podcastic, and we're on Blocktastic. Follow us and other blockchain.
You download Streamcastic, then we're on
Streamcastic. Yep. And we're on the podcast.
Yep.
There you go.
Yep.
So we'll see you next episode.
Yeah.
And until then, do your own research.
Yep.
Come for the riches, stay for the revolution.
That's right.
All right.